The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, a bit of a turnaround Thursday in the markets as we got the grains higher on Thursday, taking back a lot of what we lost on Wednesday after that July WASDE report. Here to walk through things with us and get us up to speed on what's happening in the market trade. We welcome in our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. And Bryan, always great to catch up with you, my friend. Thanks for joining us today. I hope you're doing well.
You bet, Jess. Yeah, doing good. Very interesting day. A lot of green on the screen, except if you're a fan of the dollar. The dollar has been under some pressure here lately, and that may have contributed to some of today's gains. So just in recap, corn, December corn closed 16 3/4 higher, but back above $5.50. And that's an interesting close because yesterday we lost 17 3/4, so we made it all back but 1 penny. Beans, really sharp gains there, 29 42 higher, and wheat about 7 higher. And in part the dollar, I think in part too, farmer selling just dried up to zero. So if you're going to keep pushing prices lower, part of that push has to come from what I'm going to call the speculative interest, which has been overwhelmingly negative as of late. But corn dropped $1.50 off its recent high. So one question is, how much more negative do you be in the short term? You did get some really, really, really wonderful and nice rains across Iowa, northern Illinois, Wisconsin, southern Wisconsin, terribly dry there, Michigan, Indiana. But again, it's the same old story. Not everybody got the rains, and some of the rains were a half inch, 3/4. You're entering into the big energy use time where you need a lot of moisture. So there might be some skepticism if there was enough widespread rain, some short covering, just all kinds of reasons. A lot of concern over the corridor that Russia won't this time agree. The United Nations is really reaching out and trying to broker a deal, but nothing on the books yet.
Well, and you brought up, again, quite a few points there. And I have to think that first one you mentioned about that farmer selling drying up. I mean, after the WASDE came out, just a very bearish report all the way around, taking prices lower yet. And I have to think that I think you're right. I think a lot of farmer selling has just kind of dried up here. And a lot of farmers saying, I missed the boat again, and I don't want to sell for something on the board for December corn right now. So I think a lot of that farmer selling, to your point, is just not in place right now, Bryan.
Well, if you're insured, corn at 480, regardless of your coverage, you're either close to or you're already insured. So depending on what level that you took. So those farmers who have 90 or 85, 80, maybe 75, I haven't run the numbers on 75, but they're not anxious to sell here. A lot of farmers have gotten some much needed rain. They need more. So they're not greedy. They're just realistic. They've been so deficit moisture in parts of the Midwest. So you certainly have those things out there. So I think farmer selling is part of it. The dollar down 3-4% in the last week and a half. That's kind of a big deal. That could jumpstart exports. But here's an interesting take. So I won't grab the credit for it, but yesterday the corn yield dropped about 4 bushels an acre, and corn acres went up, right? Soybean acres went down, yield stayed unchanged. And so I was scratching my head wondering, especially on beans, why in the world the USDA has this. On the one hand, they've got people out in the field surveying, they give us a weekly view. They say, hey, 15% of this crop is in poor shape. Same thing at corn. And if you're not lowering the yield, at some point you're saying, well, those numbers don't matter, and we don't care. I'm not sure it's either of those. The numbers do matter, but I'm wondering if the USDA, they seem to have been very pragmatic. They want to make sure and try and get it right. If they said, hey, more corn acres, fringe acres. That's going to pull the national yield down 3 or 4 bushels an acre. Soybeans drop the fringe acres. That keeps us at 52. In essence, they didn't make any changes to yield based on conditions. That'll come next month. So if there's adjustments, probably next month. And actually, the USD did some wording, is sort of in the deep bowels of the report that indicated that the harsh dryness in June was also, well, I'm going to say, met with cooler forecasts and rain. So hard to put a number on the yield. I'm guessing they kicked the can down the road.
That's an interesting take, and I will add to that as well. I'm traveling today and getting a windshield view of the crop through a lot of Missouri, parts of southern Iowa into eastern Iowa today that have been very dry. And Bryan, I gotta say, the windshield view from the road, crop looks a little bit better than I thought it was going to. Now, I'm not saying that there's not issues and there's not spots, but to your point, I think some of those rains and the cooler temperatures may have helped us in some of these more stressed areas potentially, Bryan.
For sure. So the corn crop was really on a path of a train wreck.
Yes.
But when you have the opportunity to maybe see a crop improve, it's improved from where? And where I'm going with this is that if you talk to a farmer who knows his land and knows his crop and knows his potential, if he normally, let's say, yields 100 or she yields 100, or let's just say 200 bushels an acre, the corn can look good, but he knows it's likely to yield 180 or 170. That's the margin. That's his gain. That's his profit. So that's in today's sort of world, that's a poor crop. It's not a train wreck. It's not a disaster. It's not 100 bushels an acre, but from a revenue perspective, it's not a very good crop. You need better. So farmers, they're excellent at what they do. They expect 200 bushels or better. If they look at 170, 180, 165, it's almost like a failure. So I think that's reflective in how when you really listen to farmers, they're always guarded when they're looking at weather and their crop, but their mind is always a week to two ahead of where the actual crop is. So when it's getting dry and you talk to a farmer, if you listen carefully, a lot of times they say, well, boy, we're a week away or 2 weeks away from a disaster. Well, the week or two didn't happen this time. A lot of people got rain. So, and the genetics proved beneficial. And I think we'll see that too, Jess, that, 2023 is not 2012. The genetics are just better. And so are the tillage practices and farmers and everything else that goes with it.
I would agree with that sentiment. Soybean wise, obviously Wednesday, interesting numbers, a much bigger carry out than expected. We cut demand, USDA did, left yield unchanged. We got the lower acres figured in there. It just feels like USDA made what was looking like a bullish scenario in beans. They tried to make it bearish, Bryan.
Well, we'll see what happens today. The market quickly reversed, and the market will maybe dismiss the USDA because they might look at it and go, well, the USDA's, they too are thinking a month ahead, and we'll make adjustments then. Now, I'll be a little bit sarcastic, so that's my disclaimer, but it looked like shuffleboard to me. You bring in 25 million bushels from last year, and you decide this month to make 100 million bushel cut in exports. You could have feathered that in over a long period of time. And so we've got 300 million bushels of carryout, right? So if you didn't cut the exports, you're 200 million, right? And if you cut the yield 1 bushel an acre, you're at 150, less than 150 million. You can see where the numbers could have gotten explosively bullish. And I'm not saying they intentionally are holding the market back, but they might be saying, before we get over our skis, let's feather in lower crop yield if it needs to be, but we're not going to jump the gun too quick and create, this market that could all of a sudden run $2-3 a bushel. That again, I'm going to finish with my disclaimer. It's Bryan Doherty's opinion and not necessarily indicative of past results and future, all that stuff. But again, it's subjective. There's some numbers here that need to come out of the wash yet. And perhaps we'll find that, as long as you can keep a bean plant alive until August and get a rain in August, you can have record yields. I don't know.
Very true. No, very, very true. Wheat side, real quick there. You would think with a lower dollar, wheat would trade a bit higher than it did on Thursday, but wheat was just kind of steady to slightly higher. Any notes on the wheat side?
Well, it did pick up, 6 to 8 cents in Chicago, but after yesterday's decline, the net of the last two days a little bit disappointing. I think the market was a little bit surprised that the overall supply increased and went up. I will, and I'm a small sample survey, but I'm surprised at how many farmers that I thought, and they thought, that with the heat and dry, that their soft red winter wheat wouldn't yield as well, and it's coming in pretty solid. So there again, maybe a good testament to genetics and then good farmer practices to get the wheat to that level. I still view the wheat, when I step back and look, as a world crop, and there's some problematic problems in the world, the U.S. dollar with growth, some heat, Ukraine, Russia, dry, North China issues, Northern Europe turning dry. You can make an argument that wheat probably a little bit undervalued right now, to maybe a lot undervalued, but it's certainly not got the attention of the investment community to aggressively, start buying into wheat. The corridor, it might be the swing vote. We'll know that a day or two or three or four. Yep. I think the 17th is the deadline. So that's what's interesting there. But kind of circling back to the corn. I just want to touch on this real quick in the corn. In 2012, when we had our drought, I want to comment on what you're saying there, Jesse. I had so our office in southeastern Wisconsin, and I had business in let's say north central Iowa. So I had to jump in the car in July and drove out. And in my mind, the drought conditions I was expecting to see brown fields with corn plants, half dead and tipped over. I saw wonderful green corn. It was a little different color green corn, but again, the yield wasn't there. The national yield was down 25 bushels from what was expected, and that was a train wreck from a supply side. So again, in our day and age, we're used to yield being very solidly good and close to what the USDA expects. And you think about it, even at a 95%, if we're at 95% of what the USDA was forecasting, that's 172 bushels an acre. 5% in anything is pretty small variance with all the, think about all the things it takes to get a crop from seed to to harvest.
Yeah, couldn't agree more. No, there's a lot of things to think about, and I appreciate your thoughts and points there. A little bit of perspective for sure is always a good thing. We're having a conversation today with Bryan Doherty from Total Farm Marketing. Bryan, before we wrap it up today, I want to touch on livestock, cattle, hogs first. Bit of a mixed bag there in the trade. Hogs a little higher, cattle a little bit lower, especially feeders. Higher corn prices, have to think, had an impact there. But what's your assessment? I know we got some different numbers from the WASDE for beef and pork production as well that I think might be at play here. What's your take on the livestock?
Well, I think what's going to eventually come out of the wash is that hog prices got battered so hard when corn prices were relatively high that we slaughtered sows, and that the next hogs and pigs report is going to show a smaller supply. And I think the board is reflecting that as well. A big, strong recovery. You look at the July contract, 102, over 102, kind of capping here in the last week. But remember, it was at $75 6 weeks ago. So too much downward pressure. Feeder cattle, yes, reflective of higher corn today. Still what I'm going to call a hot market, limited supply, new contract highs established a couple days ago. Really kind of blew up the top and then had a poor close. So anybody who's long, I think they run their sell stops right up under the market. That means if they own the futures, if it's showing any signs that it's not going up, they're out. And I think that's what you had after yesterday's kind of scary close. And then today we close under the 10-day moving average in a lot of the feeder contracts. We hadn't done that since we actually left that island bottom on June 23rd. Island bottom just means you gap lower one day, and then when you a couple days or a few days go by and you gap higher in the charts, it looks like an island. And when you do that and you keep higher, that's a very bullish signal. But there's a number of gaps on the chart or that likely to be filled yet. So anyway, the feeders are probably reflective of higher corn today, and then lack of real strength in the live market. Cash is still good. cashless firm. We're looking for asking prices $1 to $2 higher again. I don't know if they'll get it. I don't know if it's been well defined yet this week, but it's a wait and see attitude. Kind of let's not lose sight of the forest when we're standing in the trees. We're still in the midst of a strong bull market, but we are seasonally at a time where we start to see summer demand tail off, and that gets me a little concerned from here mid-July to probably October. And then we really like to a lot of times in that October look to the deferred months as months that will rebound in price. We got to get a pullback first to have a rebound. So I don't know, that April contract may have peaked, but we're still targeting potentially 190, 200. I know that sounds really optimistic, but I'm not so sure we've exacerbated our tight supply yet.
Bryan, great thoughts. Before we let you go today, anything final you want to share with us or reiterate today?
Yeah, just a couple of things. Just one add on to the cattle there. If you look out west, better rains here this summer, better pasture conditions. So pasture conditions are improving. So you're going to see some cows pulled off of the slaughter level there, but you'll see some go in on the dairy side. And dairy had a really nice day today, one of the best days that they've had in multiple months. So a little more reflective of what we think is a market that's probably oversold and at least due for a correction. But we're also hearing where producers are really getting more to the knife. I'd like to leave you guys with just the idea again. We saw this corn market run up brutally hard and then pivot and turn brutally, so you had to be bullish one day and had to be 100% negative the next to capture all of that. Hard to do that. But what you can do is, if you see the market trending higher, and put your wish orders out there. Sometimes they happen, and guys that didn't think they could get $6 or $6.25 on December board, they got it. It was a little scary when they got it, but a week later, they're very pleased, and it's still a good value. So I'm always a big fan of selling value. I don't care if corn goes to $8, $6.25 still made a lot of sense.
Good thoughts, Bryan. I know if folks have questions, they can reach you there at Total Farm Marketing very easily. How can they get a hold of you?
Best way is a phone call, 800-334-9779. So we'll start with that. Then I would argue or ask that if you want to email me, it's Bryan, B-R-Y-A-N, so Bryan with a Y, at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com.
Bryan Doherty, Total Farm Marketing. Always great to chat with you, my friend. Thanks for joining us today. Have an awesome weekend. We'll talk to you next week.
Thank you, Jesse. My pleasure. Thank you.
Let's go do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.